consent with the production of financial statements to users outside the business, though of course the records from which the statements are prepared are essential for the day-to-day running of the business also. Management accounting is an integral part of management. It is concerned with the identifying, presenting, and interpreting information used for formulation of strategy, planning, and controlling the activities, decision taking, optimizing the use of resources. What is accounting? What you're looking at here is a diagram or it's a box or a table that would show management accounting and financial accounting contrasted. The contrasting that you're looking at right now is for financial accounting, which is up here for financial accounting, and on my right here there's management accounting. So what you're looking at is an explanation of the contrasting. On the left, on your left, you see financial accounting. On your right, you're going to see management accounting. Now, in blue over here, it explains the contrasting of financial accounting and what it consists with. And on your right, you will see management accounting and what consists with the management accounting. We're going to start them both. Financial accounting. It is a legal requirement to prepare financial accounts, publish them, and keeping a record of them. When it comes to management accounting, keeping records of management accounts is not mandatory. Now that's different. On stage 2, you're looking at financial accounting information is prudently computed in accordance with the legal and accounting requirements. On the management accounting on stage 2, it states information from management accounts should be computed as per management requirements provided it is relevant. On stage 3, on financial accounting, financial accounts are mainly historical records. On management accounting on stage 3, management accounts are concerned with predictions. On stage 4, financial accounting, financial accounts are concerned with profits. The management accounts are concerned with cash flow, profit, and business management generally. On stage 5 of financial accounting, the cost of record keeping is a necessity. On the management accounting, the cost of record keeping needs to be justified. Financial accounting comprises 2 stages. The recording of day-to-day business transaction is referred to as bookkeeping. From the bookkeeping records, accounts and financial statements are prepared, and these statements summarize the performance of the business, usually over the period of 1 year. Financial management and auditing definitions. Financial management covers all the functions concerned in attempting to ensure that financial resources are obtained and used in the most effective way to secure attainment of the objectives of the organization. Auditing may be external or internal. An external audit is the examination of an expression of opinion on the financial statements of a business entity. An internal audit is a review of operations and records, sometimes continuous, undertaken within a business by specially assigned staff. The purpose of accounting. The purpose of accounting is to provide information to users of the financial statements. The needs for accounting information differ from one user to another. The users of financial statements. They are the stakeholders who have an interest in the information contained in the financial statements. The stakeholders have each their own different area of interesting in the financial statements. They are classified as follows, with a summary of their needs, but they are not limited to the list below. Government. Government agencies use accounting information to collect statistical information to reveal trends within the economy. Government, through the Zambia Revenue Authority, will use accounting information to determine the tax liability of the business entities. Banks and other lending institutions. Lending institutions use accounting information to determine whether the business has the ability to repay loans and the interest charged. The disadvantage is that accounting information may not show up to date financial position and performance of the company. Hence, lenders will ask for cash flow forecasts. This illustrates why accounting techniques have to be flexible and adaptive to meet users' needs. Competitors. Competitors will use their own results with other companies provided they do not disclose information harmful to their business. At the same time, may not wish to hide information which would put them above other companies. Board of Directors. The Board of Directors want up-to-date, in-depth information so that it can draw up long-term, medium-term, and short-term plans, compares results with its past decisions, and forecasts. The information the body requires is much more detailed and is published. Shareholders and potential shareholders. And as investors in the company, shareholders require managers to be accountable to them for the performance of the business. They are said to be the owners of the business, while potential shareholders use accounting information to assess the viability of the company before they can acquire shares in it. Financial analysis. Financial analysis advising investors such as Unity Trust, insurance companies, mining companies, and pensions authorities are among the users of accounting information for the purpose of advising their clients on various financial matters. Employees and trainees use accounting information to assess the potential performance of the business. This information is important to the employees who wish to discover whether the company can offer safe employment, promotion through growth over a number of years. Trade unions use profits in calculations and claims for higher wages or better conditions. Customers use accounting data to assess the viability of a company so as to determine if contract can be placed with the company. The general public. It is a legal requirement for the company to publish its financial statements. Hence, the general public has access to the published information through the press. Responsibility of the preparation of financial statements. The board of directors or management as agents of the business entities are entrusted with the responsibility of preparing financial statements. Business entities, types of business entities. Sole traders. A business entity normally operated by one person is called a sole trader. Partnership is a business jointly owned and run by several people. A company is formed using contributions from a number of people called shareholders or members. They own the business, but they do not participate in its management. Legal personality. Unlike a sole trader or partnership, a company is a legal person distinct from its owners. A company can own property, can be sued, and sue just like any natural human beings. Limited liability. Unlike a sole traders or partnership, companies have limited liability. This means that in case of winding up, creditors of the company will not go to the extent of sequestrating personal belongings of shareholders to recover the debts. The creditors will only be allowed to repossess property registered in the name of the company. A limited liability partnership, like a company, also has limited liability and is distinct from its owners. Types of companies. You're looking at the table of types of companies. There are two types of companies. The one on the left here, the one on the left right here is called public limited company. Public limited companies. This one on the right is called private limited companies. Public limited companies are listed on the stock exchange and must have the word public limited company abbreviated to PLC at the end of the name. The maximum number of the members is unlimited. The minimum number of the members is 7. Private limited companies are not listed on the stock exchange, but must have the word limited abbreviated to LTD as the last word of their name. Can have a maximum of 50 members. The minimum number of members is 2, though some companies have single shareholders. Availability of accounting information. Sole traders and partnerships. Sole traders and partnerships. Sole traders and partnership have their financial statements completely private and are not seen by anyone other than the sole traders or partners unless they choose to show them to a third party. For example, a bank manager in support of a loan application. Private and public companies. In the case of public and private companies, financial statements are first of all published. Each shareholder is entitled to a copy. They have to be lodged with the